Welcome back as we wind down our coverage of the World Economic Forum's annual meeting here in Davos. Now, one of the loveliest things about Davos is that you get to meet with business leaders from across the world, many of whom in the last few years have expressed keen interest in doing business with India. One of them is John Nelson, the chairman of Lloyd's of London, a reinsurance giant. Last year when we spoke with Mr. Nelson, he was hopeful of seeing the insurance amendment bill being passed. That has happened. It's been 1 year since. This time when he spoke to us, he identified the key challenges facing the insurance industry across the world, and he also spoke of the wait for doing business with India. What do you make of what the challenges of 2016 will be?
Well, I think that there is a very common feeling within the population of Davos who are here, which is unusual. I think there's a fairly common view. But on the one hand, you've got many of the developed countries actually fairly stable economically. In the United States case, obviously the major economy growing very well. Even the UK is doing well. The Eurozone is showing some signs of action in some countries. Obviously, the slowdown in China and Brazil and some of the other emerging countries is a cause for concern. On the other hand, I personally take the view that both of those economies, different reasons for them slowing down, over the medium to longer term will recover. And so I would be overall optimistic, but I think in the short term there could be some jolts along the way, as we saw earlier this week in terms of the financial markets. And the danger is, if we get significant jolts in the financial markets, significant volatility, it might undermine consumer confidence in some of those other countries. Obviously, the standout country is India, which is the star performer amongst the growth countries. And as far as one can see, India economically looks set pretty fair.
I'm going to get to India in just a bit, but I do want to still ask you about the challenges that the insurance industry faces in 2016.
The challenges in the insurance industry are pretty clear. The first, in the short term, is market conditions. We've got, if you like, a perfect storm. We've got very low investment returns on our invested capital, and if you take Lloyd's, which is, as you know, the global hub for specialist insurance and reinsurance, so it's a high-risk market. We hold our capital to pay claims, so we have to keep the capital in very liquid form. So the returns are very low. At the same time, because of the low interest rates and low investment returns elsewhere in the market, the global funds are looking very hard and see the insurance industry as a very attractive place to invest, partly because of the returns that we've been showing, and also partly because those returns are uncorrelated to other assets. So we've therefore got enormous pressure on premium rates at the same time, and you're seeing that particularly in the reinsurance market. So I think that would be the first challenge we've got. Hopefully it won't be other than relatively short term. I think we're going to have a tough time for the next 2 or 3 years. The second challenge, I think, for insurers is keeping insurance very relevant to the way in which business models are changing. So if you look at the new kinds of risks that are being created by technology, here we are in Davos talking about the fourth industrial revolution. What is that doing? That's creating new kinds of risks. The obvious one, much talked about, is cyber, but all sorts of other risks, supply chain risks of different natures. So the insurance industry has a challenge to keep up with that. The third area, I think, for insurance, again driven by technology and processing, is to make sure that we keep up with the fintech revolution in terms of processing, in terms of data. Insurance is a huge consumer of data and provider of data, is to make sure that we use that in the most efficient way using the best technology. So those are I think, some of the challenges.
Last year when we spoke here in Davos, we were just on the cusp of India finally passing the law that allowed for foreign direct investment in insurance to move up from 26 to 49%.
Yes.
That has now been a reality for almost a year.
Yes.
What has it meant for Lloyd's? Because I know we discussed this the last time. I know that in the insurance industry, in several joint ventures in the life and general insurance space, several foreign partners are already looking to increase their stakes.
Yes.
What has it meant for Lloyd's, and what do you think it will mean for India's insurance business?
Yes. Well, let's start with your second question.
Okay.
India is a classic case of greater insurance penetration required as you industrialize and commercialize, creating, first of all, more sustainable economy, and secondly, creating growth. And to do that, you need to liberalize the insurance market, particularly the reinsurance market. So the Insurance Amendment Act, when it was passed, has got two sections. One is to do with FDI, which is raising the limit to 49%. And the second is specific to Lloyd's, because remember, Lloyd's is a market, we're not a company.
Yes.
And there's special provisions in that act to allow Lloyd's to enter as a market. So that legislation was passed. The government is very keen to promote that, as you know. You've heard Prime Minister Modi talk about it on his visit to London, and Finance Minister Jaitley talks about it quite a lot. We have been, since the Act has been passed, in detailed discussions with the insurance regulators, the IRDA, and they have been extremely energetic in creating the necessary regulatory framework, both for the international reinsurers and indeed for Lloyd's. Those discussions are continuing. We hope very much that the regulations will get published in the near future. I would hope in the next few weeks.
Had you expected that it would take this long?
I think these things always take longer than you think. I think if I'd been standing here a year ago, I might have hoped that we could have done it more quickly. But I think we've made pretty good progress. I think we're close to some sort of resolution. I think what is important when those regulations are published is to make sure that there are two elements to it. One is that there is a sort of level playing field for the industry. Secondly, that it is true liberalisation. Because if we get true liberalisation, then what you'll find is that the international carriers, reinsurers, will come in to support the domestic Indian insurance industry so that they can write much greater volumes of insurance, which they will need reinsurance for, but also write the emerging and more difficult, sophisticated risks that that Indian business and the Indian economy requires. Without that, you're going to have a continuation of what you have at the moment, which is not enough insurance and not providing cover for all of the risks that are necessary.
So once these regulations are in place, and you're hopeful that will happen sooner rather than later, what can we expect to see Lloyd's do in India?
Well, I think it depends a bit on how the regulations turn out. Okay. What I would hope is that it's not going to happen overnight, that gradually the Lloyd's market will. We already write business for offshore, yes, reinsurance business offshore for Indian carriers, but that we will gradually do more and more. I think you will find managing agents from Lloyd's coming onshore India. Okay. I think China is a good example. It's taken us, what, now 10 years in China of commitment following the liberalisation. We now have an extremely healthy situation in China where we have over half our managing agents are physically present in China. Now, it's taken quite a while. People need to assemble the data, create the relationships, and all of that. But I think in India's case, I would hope it wouldn't take quite as long as 10 years, but I think it will take time to get there. And the same will be true, I think, of the international carriers as well.